Hello and welcome to the second part of this weekend's technical analysis video, weekending February the 10th, 2012. Part 2 will contain silver, gold, and the gold to silver ratio. And on the screen, we have the silver chart, 4 different time frames, zoomed in, double that is. And we have the weekly, the daily, the half year, and the quarter day chart. Within the weekly chart, we've had a couple unvolatile weeks after 4 weeks of upside movement. The market did not extend its further upside, nor did it retrace down lower. Rather, it paused for 2 weeks extremely less volatile. I'll ask a question right now, a trivia question, and I'll have the answer later on in this broadcast on this part. And that is, when's the last time there were 2 consecutive weeks where silver traded less than 5% within the exact same similar kind of range like we've seen in here? When's the last time before then? We'll have an answer later on in this part. But 33.58 is exactly where it closed. It's an extremely large level. It's pausing at this level, waiting for a level of decision, because right now it is indecision. And this last week, we did extend its gains, and just barely. So this ended up being that of a bull trap. And I was one of the ones that got trapped along the way, as I seen the market break up towards this level, come back down to this significant level, and oftentimes, if you see a new gain like this, it comes down here, that's when the thing really starts to get going. That didn't happen. When you're in a sideways consolidation, oftentimes you're going to go from trap to trap to trap. So you have a bull trap, bear trap, bull trap, and so on, because when you get trapped, oftentimes you get a fast move in the opposite direction, which is not happening right now. And when you're in a major range, then oftentimes you get that where you just go back and forth and back and forth, and finally you're going to break out or break down, and it usually is pretty big. Now I gave some levels on the quarter day chart for significant support lines, and because, well, we obviously held these 2 significant levels, so the numbers are pretty much the exact same. If you need to know them, look back at last week's video. Daily time frame, you can see it's the sideways consolidation here, and really in the half year, it's just this small little tick in there. So let's get started within the charts, and we'll start off with the quarter day chart. Really, like I say, it's mainly a sideways consolidation, but you can also look at it from another perspective, and that is a very small uptrend. You can draw a trend line like this, do a parallel line, and there's an uptrend with a very weak rate of ascension. These bands in here, I know the Bollinger Bands are probably more like here, but I don't use Bollinger Bands. I use the bands that I've created. What it does is it takes the average volatility over the last 18 periods. Volatility is taken a per period, high minus low divided by low. And after the 18 front-weighted moving average, what I do is I triple that volatility and add that volatility on to the 18 moving average of highs. And that's where I get this, and then the same movement from the highs to the lows is the same as this in here, basically. But basically, you can see that, I've said that word like 4 times in a row, whatever, that we're still a decent away from both levels. So once it breaks out or breaks down, it really has the legs to get going to one side, because oftentimes the breakdown's fairly fast. We got 2 significant levels of support, one at 3104, another one at 2907. I think 29 and change is the absolute must hold bases, like big time. Because we've had a nice little rally from this point in here, and, well, it's okay to retrace when it finally needs to, whenever that time happens to be. But it had a nice breakout above this 3168 level, which is showing to me that this selling is that of a failure. And because of that, it's still fine to come back down to 31 2/3, and then maybe come back in this and maybe find a way to break through, because that's what happens within these bull markets. But I realize that if we top here really a decent level above here or below this mark, and we break down, then this is one heck of a failure in here. And I say this because oftentimes when you can get above here and at least hold and stay above it for quite some time, then you're pretty much almost definitely going to have a test of this last significant high, while you really shouldn't correct too much more than really even down, I guess, towards in here. But the odds do favor that we're at least going to have a test of the previous high, which is set at 35.67. 3-day time frame. The current candle is 2/3 within the time frame, which is last Thursday, Friday, the next Monday. But you can see now 4 bands of consolidating amongst this significant Fibonacci level. For if this selling here is to become a failed move, it still really needs to get above here, but it's trying to become neutral. If it breaks down below and is unable to hold, watch out. It was probably going to be a huge crash. But the more I've been thinking about it, the more I think it's probably not going to happen. Doesn't mean it will, but most likely I do think that it's going to have a nice little move up towards this significant Fibonacci level at 38.91. And 38 area is such a huge massive level. So the areas for next previous resistance. Previous highs around 35. Then you got around the 38 level, which is then followed by about 43, which is then followed by about 50. Okay, let's move this on now to the weekly chart and on the weekly term time frame. I closed exactly at this 33.58 level. I had a kind of weird feeling on Friday that it was going to close exactly at that level, and quite frankly, it did. But what's really important is that this Fibonacci is from the 1774 low and the 49.81 high. So for this rally to not fail, it's got to successfully hold 26 1/3. On 2 occasions, it's tested it. On 2 occasions, it's passed that test thus far. Breaking it above here means that we've been neutral since really the summer of last year. And breaking out above, this thing really could have the juice to really get going and continue the previous bull market. Now, I asked the question, as you see here, when's the last time we've had 2 weeks like this? And the answer, right in here. And it looks like more than 2. I can see like 6 in which it, of course, was doing that. Now let's move on to the half-year chart for silver. This will be the final silver chart. And what I want to do now, while I can remember, is just draw a trend line that doesn't mean too much other than the psychology of movements. Let's just draw something like that. That's not even the chart I want to use. There's a good one. Now, what's important is to note that when you're back in here, you're well away from this trend line. And in part 1, I talked about a trend line that's currently at like 140. Well, let's assume you're back here at this bottom in here. It's like $4 an ounce. Yet the trend line at that point would have been like 25. You have to gain like 5-fold just to hit that trend line. Well, that seemed at the time like it was a far level away, but it's gotten there. So when you're looking today at 140 being a far way away, well, within time, just maybe, it may manage to get through that level. This resistance level at 20 or so in March of 2008 was hit. Notice there was no resistance last time. When it broke through 1774, it really got going. So when it does get back to 50, I've heard people saying, oh, when it gets back, they're going to sell. And maybe selling a little is not that bad of an idea, but don't be surprised if, because of this consolidation period, when it's ending and the bull market resumes, that it just really gets going. Let's move us on now to gold. We'll move to the weekly term time frame, and 2 weeks as well, which is really in a pause mode, but it's holding above here. And as far as Fibonacci is concerned, we can take the high that we have, which is basically 1921, divided by the low, which looks like 1520 just by looking at it through my just eyeballing it basically. So I divide the high by the low. I'm going to put this to the power of 0.618, and we'll multiply it again by 1520. So that's about 1756 or so. which means that for this selling to be a failed move, it's got to confirm a move really above the 1756 level. When that occurs, then just like silver, it really has the mojo, if you will, to really get going. Let's take a look at gold on the quarterly term time frame now. And trying to short this market is like trying to run in front of a truck that's going full steam ahead. I don't know why you'd want to do it, because you can say that it's up too much and it's just gotta sell off. And well, people were saying that in here and in here and in here and here and here, and it's, you keep saying it, you're finally going to be right when you're the last time, but obviously no sign of there being any significant top whatsoever. And this is just a beautiful bull market, to say the least. Now let's move this on to the gold to silver ratio. I showed this chart, I think, last week, and I have a 75-day Fibonacci, and what that means is it automatically finds the highest point for the gold to silver ratio over 75 days and the lowest point, and then it does the Fibonacci calculations. So from the whole time frame of this silver bull market, the gold to silver ratio is extremely bearish, because when it broke down below here, it never even touched the Fibonacci until the move was already over. Now, within this Fibonacci mark, it had held the support here, 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 and then it's finally given here, and for the last few weeks or so has been in this bearish state. But that's using the 75. If we use a different moving average, say the 200-day, well, obviously it's bullish. So the key significant Fibonacci that I'm showing you is from this low to this high. Therefore, this is a significant level of support, followed by this mark in here. I'm going to end part 2 now. Part 3 will include, let me remember, palladium, platinum, copper, crude oil, and the dollar index. Thank you for tuning in. Bye-bye.